Good afternoon, ladies and gentlemen. My name is Michalis. I'm one of the market analysts here at HFM, and I'd like to welcome everybody to another live analysis session where we're going to be analyzing multiple assets, specifically gold, before the major announcements of the week. Now, of course, we had a significant announcement yesterday. That, of course, came from the non-farm payroll figure, which was actually a non-farm payroll figure for 2 months, the unemployment rates, the average hourly earnings. We will, of course, look at that and determine what it means for the market, especially for gold and the NASDAQ for the longer term. But we, of course, need to look at what is about to take place over the next 24 hours as well, which is going to also have a big influential impact on the price of gold, the price of the US dollar, the price of stocks as well. And that is, of course, the inflation rate for the United States of America. The inflation rate for the US will be released tomorrow. We will look at that together, of course, on our calendar. But first, let's look at what was released yesterday. Now, there's a lot of conversation, ladies and gentlemen, in regards to what kind of effect it had on the market, if it was deemed as something which is dovish, if it's deemed as something which is bearish within the financial trading markets. Now, if we go to our calendar, ladies and gentlemen, let's look at exactly what was released, because a lot of people believe that it's solely an influential factor alone is the NFP figure. Whereas actually, you can look at certain things in regards to it being a hawkish indication, and other factors actually indicate to it being a bearish and dovish indication. So that's what we're going to look at as part of today's live analysis. Of course, we're going to be looking at indications, technical analysis, price action, and so on and so forth. Now, in regards to what is going to be released tomorrow, we are going to expect inflation. That includes the standard CPI, which is used as the official inflation rate, and also the core CPI release as well. Now, both are expected to remain at 3%. Now, if they do remain at 3%, that is something which is deemed as positive for gold, and something which is deemed as negative for the US dollar. But if it is going to come in at 3%, then different economists and analysts may view it in different ways, because it is still an inflation rate which is sticky, which is elevated, which is not at its 2% target. Nonetheless, it will have potentially a dovish bias. However, if it does come in lower than 3%, even if it only is lower by 0.1%, so if it declines back to the twos, to 2.9%, for example, then that, ladies and gentlemen, is something which is definitely deemed as dovish. It cannot be deemed in any way, shape, or form as something which is already priced within the market, something which is hawkish in terms of its bias. So that, ladies and gentlemen, can create a lot of volatility indeed. It can create sharp upward price movements specifically for gold and the stock market. Now, some people may say, why is there a possibility that inflation has declined? Well, if you look at the past 2 months, ladies and gentlemen, we have to take into consideration that we've had the US shutdown. A lot of people didn't get paid. A lot of people got lower paid. The unemployment rate increased as well. It's increased to actually a 4-year high. If we look at other elements within the economy which have a big impact on inflation, probably one of the biggest impacts on inflation is the oil market. So, for example, if we go to our MT5 and we actually look at crude oil just for the moment to see exactly what kind of price movements we're seeing, look at this price movement that we're seeing, ladies and gentlemen. Now, if we're looking at the high that we have seen over the past 6 months, we're currently 30% lower. So that's a significant decline. Now, if we are only going to look at what kind of price movements we had in October and in November, then and we're going to exclude the decline that we have seen this month, then we're still trading 6.5% lower. So this is also potentially something which can indicate that there is a possibility, doesn't mean it will happen, but there is a possibility that inflation will decline. If inflation tomorrow comes in higher than expected, ladies and gentlemen, then that is something which, of course, has the opposite effect. At the moment, 74% of market participants believe that the Federal Reserve and the Federal Open Market Committee in January will pause. Now, depending on which member of the Federal Open Market Committee you're speaking with, most of them either believe there's going to only be one interest rate cut in 2026, and some of them two interest rate cuts in 2026. Now, if you're going to listen to fund managers, economists, analysts, they actually believe they're going to be very reluctant to cut in the first quarter, but after that, they're going to have to start cutting quite frequently. A lot of those individuals believe that there's going to be a minimum of three interest rate cuts. Nonetheless, the way the market is viewing the way that the Federal Reserve is reviewing the monetary policy is definitely something which is hawkish at the moment. If inflation comes in higher than expected, okay, if it comes in at 3.1%, both core CPI and the standard CPI, then the Federal Reserve is going to become even more hawkish. And especially those members which were slightly dovish, or even those which were extremely dovish, for example, Mr. Mirren, then they're also likely to see a very big change. Now, we're seeing a lot of volatility as I'm speaking in the market as well, because there is members of the Federal Open Market Committee which are currently speaking. So if inflation increases higher than expected, then both the Federal Reserve will maintain its hawkish policy, probably give a more hawkish guidance because of it. And for the first time, the market will also have to, at least for the first quarter, start to view the monetary policy in the same way that the Federal Reserve does. So that's in regards to the CPI. If we're going to look at what has been released already, though, so for example, looking at what was released yesterday, what was released in terms of the NFP, the unemployment rate, there is positive and negative factors to it. Now, in regards to the non-farm payroll figure, the non-farm payroll figure was extremely weak in October, but was quite strong and rebounded in November. Now, a lot of market participants may ignore October because of the shutdown in the US. Because of the shutdown in the US, the figures came in significantly lower. So some people may ignore it and just focus on the fact that in November it significantly rebounded. So some people may look at it as still being slightly hawkish and is not necessarily going to pressure and convince the Federal Reserve to cut in January. This is probably one of the reasons why only 26% of the market believe the Fed will cut next month. And there's also a lot of factors, though, which are still indicating dovishness. The unemployment rate rose to 4.6%. Some people are brushing that to the side, saying it's not high enough necessarily to pressure the Fed or pressure inflation. But we have to take into consideration that at the unemployment rate probably is the most lagging indicator that we can see. It's probably one of the last things that we see completely deteriorate, which is why the Federal Reserve always views it with caution, the unemployment rate. So the unemployment rate rose. It's at, like I said, the 4-year high. Also, the PMI data for both services and manufacturing both came in lower than expected. So that's also dovish, ladies and gentlemen. Now, that's one of the reasons, if we go back to, actually going back to gold, that's one of the reasons, if we go to a 5-minute time frame, why we've seen such strong upward price movement for gold. So let's start looking at different potential layouts and indications that we're currently seeing, also potential setups that individuals can take into consideration for gold. Somebody says, what time is the CPI news? The CPI news will be released tomorrow at 1:30 GMT. So depending on what country you are, you have to amend that time depending on what your specific time zone is. So that's 1:30 GMT. So if you're, for example, GMT plus 2, then it will be 3:30. So that's going to definitely create a lot of volatility for gold, ladies and gentlemen. We need to be cautious of that and keep that in mind. Now, at the very beginning of the European session, and a lot of people say there is a theory out there that gold should be, should we say, cautiously traded at the very beginning of the European session. And it's better to trade gold actually in the Asian session or the US session. Of course, it's completely down to you how you're going to view that. But when we were looking at the European session, we did see that strong decline. That's not a retracement, ladies and gentlemen. That's a full price correction. So if we're going to look at the decline here, it declined to the previous low. Even though we went to a higher high, we went back to that previous low. We went to the 200 bar simple moving average as well. Now, we found support at this level. We found support at this level again. We found support at it for a third occasion as well. Now, what happens when the price continues to find support at a level? Now that I've zoomed out, if we look at this, it's also finding support at a level, which is a resistant level being flipped over to a support level. Again, this, ladies and gentlemen, is giving a strong indication that at some point this support level is going to either weaken and we're going to see the price continue to decline, or it's going to see it lose that downward momentum and actually indeed find support and push its way upwards. Now, if we go back to, for example, here, then we're seeing a high, we are seeing highs continuously higher. We're mainly seeing buyers controlling the market. If we're looking at the moving average, we're not necessarily below the moving average. It's just that we're trading at that neutral level. So there is indications here that the price is going to move upwards. The price does indeed move upwards. The only thing which I would was slightly cautious about and still is slightly cautious about is the US dollar is also increasing in value. So gold is increasing in value, but the US dollar is also increasing in value. Yes, it has seen a dip. If we're looking at what the price movement that we have seen since the European session, should we say, we are seeing a dip. It's declined by 0.25%. Regardless of that decline of 0.25%, we're still significantly higher than we were yesterday during the US session. If we're looking at also the best performing currencies, ladies and gentlemen of the day, which is the best performing currency? The best performing currency of the day is the US dollar. The second best performing currency of the day is actually the Swiss franc. Now, if we're looking at the Swiss franc is unchanged. It's not seen any gain. It's just that it's not seen a loss like other currencies. The only currency in the market which is seeing a gain is the US dollar, and it's the best performing. Of course, that's inversely correlated, ladies and gentlemen, with the price of gold. In addition to that, we're still trading above the 200 bar simple moving average. So when we're looking at gold, ladies and gentlemen, we have to be cautious. Okay, we have to be cautious because gold and the US dollar is not traditionally known to increase simultaneously in value. And also, we definitely need to take into consideration that yes, we were at a support level, we found support, but that price movement has already formed. What we actually see now is that we're at a resistant level. Now, somebody is saying to me, analysis to buy when? Okay. So let's say somebody is going to maintain the bias that gold is going to continue to increase in value like it has been increasing in value over the past 2 years. Maybe that tomorrow's inflation rate is indeed going to come in at 2.9%, 2.8%. Anything lower than that is, of course, very unlikely. But generally speaking, let's say lower inflation, and it's going to push gold higher. We definitely don't, even though we're above the 200 bar moving average, okay, even if we go to a higher time frame, so for example here we're on the 2 hour time frame, we're still above both moving average. So we still got a bias here that buyers are controlling the market. If you're looking at the RSI here, which you can't see probably because my face is there, but if you can see the RSI is currently trading at 50, just above 55. So it's just about in the zone indicating that buyers are controlling the market. If we go to median time frame and look at the MACD is also on the positive side and still above the signal line as well. So we have a lot of signals indicating a buy. Price action, no. And this downward price movement has brought us back to a neutral level. So we in no way have an indication that the price is going to increase in value at the current time. Doesn't necessarily indicate that the price is going to decline. Like I said, we're at a neutral level. Why? Because we have conflicting signals. Now, if we're going to follow traditional price movements and price action, it indicates that this resistant level, which is a key level, is where it's going to find support. It's the resistant level being flipped over onto the support level, something which we've already seen twice today. So that is something we need to keep an eye on. Of course, if it's going to decline below the moving average, then the selling buy starts to materialize. We start to see our potential buy deteriorate, at least for the time being. Now, let's say it does decline to here. What do we need in order for us to get a buy signal for gold? Number one, ideally, most traders would want to continues to decline. For example, sorry, if we go back to a 5-minute time frame and look at the US dollar, they ideally want the US dollar to decline below the 200 bar simple moving average. If we do, it maintains below the neutral level on the RSI, it's below the 200 bar SMA, and we also have a bearish breakout, which is a positive sign for gold. That's one thing we want to see. The other thing is we want to see it regain bullish momentum. So what do I mean by regain bullish momentum? Now, to increase to the previous high is an increase of, let's say, 0.5%. Okay. Now, there is certain theories. Some people are kind of risk averse, should we say, and they look for 75% of the momentum in the retracement to be regained. Some people look at for less than that. A lot of people, there's a well-known theory that looks at 61% being regained because retracements are anything up to 60% based on a lot of economic theories. So 0.50%, so 0.5%, divided by 100 times 61 is, let's say, 31%. So 31% of an increase is basically here. So, ladies and gentlemen, this here at this green line, I'll change the color to a green so it's clear for everybody. There we go. At this green line is where the buy signal starts to materialize. So that's potentially where we may see a buy. Of course, we need to take risk management measures into consideration. But if we do increase to that level, ladies and gentlemen, then it means that that support level has kicked in. It means that based on traditional price action, we're out of the retracement zone. It also means that we're following and maintaining non-conflicting signals on larger time frames like this one, and also here on gold as well. But what we definitely want to see is that the US dollar also continues to decline. In that scenario, ladies and gentlemen, then we have a potential buy signal. Now, if we are going to see a potential buy signal, some people say, is it really going to continue increasing in value? How much is going to increase in value? Now, if you are cautious and you're not sure how long to keep on to the trade, then what you can do is instead of opening one larger trade, you can open simultaneously at the same time 3 smaller trades. So you're not increasing exposure because the trade size is the same. It's just that you're opening separate trades and they're smaller, but all at the same price. So it's the same as opening, should we say, a larger trade at the same price. Excuse me, ladies and gentlemen. So why may somebody want to do that? Because what he may look to do, if he does do that, is look at, a take profit. I'll make this blue, I think. He may look at a take profit here, which is relatively close. I mean, that's an increase, ladies and gentlemen, of 0.14% approximately. So he may look at the first take profit there, a second take profit here, and then a third take profit, for example, somewhere here. This is just an example. So then he's got one trade which is plus 14, one trade plus 24, one trade plus 34. And then that way, if we are going to get, for example, a price movement that looks like this and then declines and maybe hits our stop loss, for example, then at least 1 out of the 3 trades have hit the take profit. If we get a slightly stronger price movement, for example, like this, and then it declines, then 2 out of 3 trades have hit our take profit. So probably we are above the break even there as well. So it just reduces the risk, ladies and gentlemen. We're mitigating the risk and spreading it across multiple take profits. Now, let's say we get it at a very different scenario. Let's say the US dollar, like we have been seeing over the past 3 hours, continues to increase in value. Sorry, continues to increase in value like it has done over the past 12 hours or so. If that is the situation, ladies and gentlemen, and maybe we get the CPI tomorrow coming higher than expected, um, we get indications because currently the Federal Open Market Committee members are speaking to journalists. If they're also going to indicate forward guidance that indicates a hawkish monetary policy, if you're going to get a lot of price movements like this, then actually gold may continue to decline like we are seeing here. Where we're going to see that, ladies and gentlemen, should we say, really gain a sell bias, there's a few indications that we can take into consideration. Number one, is it going to drop below our moving average here? This is one thing that we may take into consideration. Another indication is it going to fall below the breakout level? Some people may look at this as a breakout level. Some people may look at this. If you want an earlier breakout, then you would look at this breakout level. That's something, again, traders may take into consideration. You may be wanting to get into an earlier position, in which case you may look at this, which is also a support level rather than the breakout. There's a difference between the two of 0.11%. It's down to you. If you're a short-term trader, that may be appropriate. But there's multiple ways that you can also get sell signals. The main thing, though, ladies and gentlemen, is that we continue to get lower lows, lower highs. We drop below the 200 bar simple moving average, and also that the US dollar starts to increase again. Now, when I say the US dollar starts to increase, it doesn't mean that we have to wait for it to go all the way up here, ladies and gentlemen. We may, again, just want 61% momentum to be regained. So, for example, if it increases above here, then that's, should we say, the danger area for gold, for example. So that's something, of course, we can take into consideration. Because, again, looking at the US dollar, it's declined back to that resistance level. So that's something we, of course, can take into consideration. A really interesting asset, ladies and gentlemen, which has seen a very, very strong trend, is actually gold. Look at this price movement, ladies and gentlemen. Sorry, crude oil. Look at this price movement, ladies and gentlemen, that we're seeing here. I've got another question. Somebody says, what asset is this analysis about? We were just looking at gold. Now we're looking at crude oil. Now, if we look at crude oil, 2-hour time frame, we're trading below 50 on the RSI. We're trading below the 75 bar EMA. We're trading below the 100 bar SMA as well. All of this is indicating a bias towards downward price movement. The only thing to be slightly cautious about, ladies and gentlemen, in regards to oil, is that it's definitely extremely low, and it is now definitely at that support level that we have seen from back in May, and also just before May, back in the beginning of April. So that's something we, of course, need to be cautious about. Now, what does that mean if we're at that support level, especially when there's a lot of negativity around oil? Maybe it's just that it's going to form range-bound trading conditions like this. If it continues to form range-bound trading conditions and continue to hit and pressure and push the support level, then, of course, the more support level is hit, some people do say it strengthens. Most economists actually say, though, that it weakens, because what it actually indicates is that sellers are becoming more comfortable with that price, okay, and more willing to continue to sell at that price. It's like, for example, when people are buying a house, or should we say looking to buy a house, at first they may say, that's too expensive, that's too expensive, that's too expensive. But when they actually see the reality of the real estate market, they start to become more comfortable with higher prices. Somebody says here, what is the cause on the sudden bull On gold, definitely something we need to take into consideration, ladies and gentlemen, that gold was increasing when the US dollar increases. Now, we spoke about this last time in the last analysis session. We actually looked at a well, I shouldn't say a longer term, but a medium term outlook for gold. And I said to traders, gold and the US dollar have been simultaneously increasing in value at that point. Of course, that's a couple of weeks ago. One of the two has to give way. Okay, if we're going to follow traditional economics, which has been around for decades and decades, one of the two will give way. Now, it was in that situation that gold gave way. Again, today, the US dollar is the best performing currency. So gold cannot continue to maintain momentum unless the US dollar really starts to decline as well. So that's the reason for the sudden dip, ladies and gentlemen. It's still, though, keep in mind, maintaining itself above this 200 bar simple moving average. Now, in terms of fundamentals, the only thing I'll be cautious about, now I'm not watching it. I can see the gentleman on the TV next to me speaking on Bloomberg, but I'm not following it because of the live that we've currently got together. At the moment, the Federal Open Market Committee member, Mr. Williams, is speaking. Okay, so he's definitely commenting on the interest rate decision they made this month, the interest rate decision they're going to make next month, and so on and so forth. Okay, now what we also can take into consideration, because that's going to create a lot of volatility, ladies and gentlemen, what we also can take into consideration is what type of uh, movements we are seeing on the expectations of the monetary policy. At the moment, like I said, it was 34%, now it's 33.4%. Expectations that there's going to be a pause. If it continues to be an expectation of a pause, especially if it's a pause for January and March, then that can really pressure gold. Now let's refresh to see if there's any changes here, because I don't know what the uh, FOMC member has said. That's increased. So that's back to almost 76%. Okay, just in the past few minutes that he has been speaking. So if he is really being hawkish while speaking, then that's definitely going to create the price of gold to decline. So that's something we need to maintain an eye on. So that's something we need to keep an eye on. Now, if we go to looking at crude oil, okay, let's go to look at crude oil. Somebody says stop loss. I'll look at that in a moment. Now, crude oil, like I said, we're at a support level. We're definitely in a downward trend, but we are at a support level. We've seen higher highs here, which is interesting, but we have seen a decline. Now, if we're going to add onto our smaller time frame here, a 200 bar simple moving average, we're above the 200 bars, retraced, but it's only retraced to that moving average, which is the support level. This is also a support level, which is very close as well. And also, again, we've retraced back to the resistance being flipped onto the support. Even if we go to a higher time frame, ladies and gentlemen, like here, if you're looking at this higher time frame, we're actually below, but we're very, very close to it. So it's not giving me much confidence. So I'm not going to look at that just for the moment. Now, if we're going to look at this, ladies and gentlemen, if we are going to see oil rebound and maintain momentum upwards, then we definitely need momentum to be regained. For momentum to be regained, we need it to be 61% and above, which is at this level here. Now, if it's the opposite, if we want the price to continue to decline, okay, and regain that momentum, then we can consider this blue line here, which is very comfortably below the 200 bar moving average. It forms a bearish breakout as well. It means we remain below the 50 RSI as well. So we can see here the RSI, it means remain below the 50, which is indications that sellers are controlling the market. That's something we can take into consideration. People can also say that this is a retracement in the medium term. So we want the sell actually to be slightly lower at this level here. Both is something we can take into consideration if we can see that downward trend decline. So that's something which is very interesting indeed as well. Now, something which is very interesting also, now I'm going to go to a 2-hour time frame for this, is actually the NASDAQ. Now, if we're going to look at the performance of the NASDAQ against the US, against the S&P 500, the S&P 500's performance on the smaller time frame was a lot more up and down and mixed price movement, whereas when we're looking at the NASDAQ, it was a stronger upward price movement and more certainty. Now, here though, ladies and gentlemen, we've seen upward price movement, but we're still remaining below both moving averages. The latest crossover is downward crossover below both moving averages. We're at the neutral level on the RSI. So on the RSI, we're at 50, okay? If we are going to really see buyers control the market, so I'm not saying short-term price movement upwards, but I'm saying buyers control the market, then we need the price to increase above this level here. If it increases above, should we say 25,500, then that means buyers are starting to control the price. Okay. At that point, we also will have a bullish breakout of this level here, a breakout of this level here. Now, somebody says here, is it not possible that it will be earlier? It's on the moving average. Even if this continues slightly lagging, this will slightly decline as well. So it becomes more in line with this breakout also, and it's an earlier entry, just to answer that question. Now, if we switch over to the, NASDAQ here, we can see we're declining, but we're above the 200 bar moving average. So how can we get validation that we are indeed going to see downward price movement or upward price movement? Now, something which is very, very helpful at validating signals is looking at component analysis, which is actually going to be within the new ebook, which is going to be released very soon. Ladies and gentlemen, also keep in mind that we do have an ebook available online. If you go onto the MyHF area, so as soon as you log in and scroll down to the bottom, you'll see there is a banner. If you click on the banner, it will show you our ebook. It's not the ebook that speaks about component analysis, but nonetheless, it is a very helpful ebook. Now, what's component analysis? It's basically, we'll either say that you can look at the top 10 companies, or slightly more in-depth analysis, which looks at any stock which has 0.5% exposure to the NASDAQ and above. So it's basically at the moment 30 stocks. And it basically will say how many of those stocks, because if we're looking at the moving average, we're above the moving average. Mainly over the past 24 hours, we've been seeing upward price movement. Here, we're definitely below though. Okay, so we need to definitely be cautious. But nonetheless, short term is mainly upwards. So are we going to continue to see upward price movement? What you can do is you can use component analysis to give you an extra signal, potentially to validate the signal from technical analysis. So it basically says, if we are going to see upward price movement in terms of technical analysis, to validate it, we need at least the bare minimum, 65% of the most influential stocks within the NASDAQ to also be increasing in value. Okay, so at the moment, most influential is these 30 companies. So basically a weight of 0.5% and above. How many are increasing in value from those? We have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, and 22. So 22 over 30. That's 73%, ladies and gentlemen, trading higher. 73%. That's quite high. That's above 65%. So that's something to be, which is very interesting. Like I said, yes, we are below, these two moving average, and ideally we want to be above them for sure. So that is a conflicting signal there. But nonetheless, the momentum we're seeing here is quite strong upward momentum. We are seeing, like I said, some points of caution. We're below the two moving averages. We're on the neutral on the RSI. We're seeing lower lows and lower highs still. So we have to be cautious, okay, because there is signs of concern there. If we want definitely a 100% signal pointing upwards, we have to wait for momentum to be regained further. Now, though, we have to be cautious about downward price movement that we're seeing here, because 74% is increasing upwards from the most influential stocks. The only thing I would say, which is, something which definitely is towards the downward side, is that the most influential company, Nvidia, is downward facing. Okay, so that points towards downward price movement, and it's quite a strong decline. It's not just a slight decline of 0.5%. It's quite a strong decline. And it's a stronger decline than we are seeing increase here. So the asset with the most volatility, if we're looking at if we look at, let's say, the top 10 companies here, okay, it's actually the decline from Nvidia. So that is the stock by the looks of it, which is mainly triggering this downward price movement. So here we can see it's declining. We have to be cautious, ladies and gentlemen. Have to be cautious. Yes, it is in line with this outlook here. Okay, this outlook here. And maybe indeed it is going to decline maybe for the next 50 minutes, the next half an hour, maybe the next 2 hours. But, okay, we have to be cautious that components currently 73% are pointing upwards. If that changes and moves in line with the downward price movement, that's great. That would be a great scenario. Whereby take profit, somebody says here. So let's look. Are you referring to gold? Because it looks like you asked this question. Oh, no, you're referring to the NASDAQ. Well, ladies and gentlemen, the good thing about the NASDAQ is that if you are currently buying, then you have a resistant level here. Okay, so you need to be cautious of that. You may also wish to aim to remain below the moving average, because a lot of the time that's where it finds resistance as well. So you can aim for a slightly further away price movement, or one which is relatively close if you're looking at medium term direction. Alternatively, if you're looking at downward price movement, we have a clear support level here. Now, a lot of people don't aim to go all the way to the support level. They'll look at, for example, 75% instead, just in case it doesn't continue to decline by that much. So here, for example, is the decline is 1.70%. They'll look at 75% of that. So 1.70% divided by 100 times 75%, so 1.27. So instead, they'll look at the decline for 1.27, which is basically there, here. So instead of waiting for it to decline all the way to here, if you are going to speculate downwards in the medium term, so somebody looking to keep trades open for at least 2 days, then that's potentially something you would aim for. For that to continue to decline, though, ladies and gentlemen, most likely we will need inflation at bare minimum to come in at 3% as expected, which is relatively high, not necessarily extremely high or seeing, for example, hyperinflation, but it's relatively high. Or for it to come in higher than expected, for example, 3.1%, in which case it's the same inflation that we're looking at with the pound and with the UK. I've got another question here. Which is the best performing currency and worst performing currency of the day? We've already mentioned the US dollar is the best performing currency of the day. That's why we said we need to be cautious about upward price movement with gold. Okay. Upward price movement with gold. We can see that took a hit. The US dollar, though, has kind of calmed down over the past few hours, though. Nonetheless, it is the best performing currency of the day. Worst performing currencies of the day. Definitely, we have to take into consideration the British pound. Why? Because it's today. Should retracing up now, but look at this decline. Inflation came in lower than expected. Because of that, a lot of people believe the Bank of England will cut interest rates tomorrow. But in addition to that, There is other currencies which are performing equally as bad as well. For example, the Japanese yen is declining today, more or less the same as the British pound. It's actually, because of recent declines, one of the worst performing currencies of 2025. Also performing quite poorly is the Canadian dollar, the Australian dollar. Best performing currencies after the US dollar is I'll confirm to you now, is the New Zealand dollar and Swiss franc. They're both declining, but they're just seeing less of decline compared to the pound and Japanese yen, for example. Now, ladies and gentlemen, I've got some nice feedback, so thank you guys. So somebody says you could multiply by just 0.75. You can. I just did it that way, just for some beginner traders to see. It's just basically just an easier way for them to understand exactly what I'm doing for those beginners. Yes, you can though. Also, if you've got a mathematical calculator, there is the percentage option as well. So that's something for us to take into consideration, ladies and gentlemen. Like I said, the pound, it did see very strong upward price movement. It did see a very quick collapse. We have to take into consideration that the OFMC member is currently speaking, Mr. Williams. The expectations of a pause by the Federal Reserve rose while we were speaking by 2%. That indicates downward price movement for gold. The US dollar is very expensive today. It rose in value. Yes, it's retraced, but nonetheless, it rose in value. If it in any way, shape, or form starts to recover to this area here, then that wouldn't be good news for gold either. So again, that's something we have to be cautious about for anybody looking to speculate upwards for gold. If we are going to speculate upwards for gold, you definitely want the US dollar to continue to decline. Also, we did say 61% momentum being regained. That's a price basically here, ladies and gentlemen. If it moves above this area, this blue line, then at the same time, the US dollar has a breakout downwards. We did break above it a moment ago, okay, but we didn't see the US dollar form a bearish breakout. If the US dollar declines below this area, okay, and also gold increases above it, then that's a much clearer indication of potentially upward price movement. In regards to the stock market, ladies and gentlemen, we've seen a decline, but like I said, 73% of the components are increasing at the moment. So we have to be cautious about speculating a decline. If we're looking at other indications, for example, if we're looking at the VIX index is trading downwards at the moment. It's minus 0.60%. That also indicates upwards, not downwards. So we have to be cautious again in regards to downward price movement for the stock market. The only thing that I would say is potentially is about to change those conditions because a member of the Federal Open Market Committee is speaking. Otherwise, it's not likely to change, of course. So, ladies and gentlemen, that brings us to the end of today's analysis. We've answered, by the looks of it, most of everybody's questions over the past 50 minutes. Hopefully you enjoyed today's webinar. Enjoy the rest of your day, and hopefully we'll see you very, very soon on our next analysis session. Goodbye, ladies and gentlemen, and enjoy the rest of